weekend. Ira Epstein with your Ag Weekly Update, and this is for Friday, the 7th of February, 2020. We're just getting on to 2 in the afternoon. As you can see, the stock market in a corrective mode, but what a week it's been to the upside. And when we look at the grain markets, we can see that we've got a rally that finished off the week, a nice one here. Remember, China has said that they're lowering the tariffs on meat markets, the grain markets. There's actually 1,700 approximate items that they're going to lower the tariff on. The scare for the weekend, obviously, is what's going to happen with the announcements on coronavirus. Are we going to see more? Is it going to level off as it's done in the past few days? Are we going to see other cases come up because more testing equipment is needed? I don't know. Nor does anybody else, so you're getting a bit of the stock market pullback at this time. The dollar's staying strong against practically every currency out there. Interesting day, and obviously what we call a risk off day, where the bonds and the notes are taking off to the upside as well. Now, when we look at a monthly chart, and it's nice to look at monthly charts, trading off them can be rather extreme, but the market is stuck at the 18-month moving average of closes. That number's 883. We finished at 882. So for all purposes, you're just hanging in there, and you have for a few months now. So it's only the 7th. We've got a ways to go, but for the month, we are up 9 and some odd cents. When we go to the weekly charts, and remember, on this edition, every Friday, we go to the weekly charts, not the daily charts. You can see the market's pretty well visually caught between the low 860s and up here getting into the 950 area. And it's been a rock and roll time, up and down, sideways, as the market is expecting soybean purchases, but they may be put off because of the coronavirus issue. China says it will meet its commitment, but it might have to move backwards in time and catch up later in the year. It's all confusing. And you see that confusion in this roller coaster ride, where you've gone from 943 to just recently this week's low was 868 3/4, and that's the most current break low. Now, we've been a little lower than that back here, but we're right in that region, and it's from that region that we're getting the bounce. Are we trending? I'm going to say no. What we've got is this wild ride with a higher high, a lower low, and we did the same thing here. If I take you back to this point in time, you were in a downtrend. The market had hit 867.5 is the low, and then it just went straight up. Then it peaked out again, and now you're getting into this ride. So if you're looking for action, it's here. Catching it, very difficult, because it's almost V-shaped moves up and down. On the way back up, where might resistance be waiting for the market? Well, one of the possibilities is the 100-week moving average in green on the chart. The other is the 18-week average. The combination of the two of them might be what the market pays attention to. If you look when you fell, though, it didn't mean much to it. And when you went back up, it didn't mean much. So again, this wild ride is very different than we had in patterns back here, where the 18-week had a definite impact on the market. You're not getting that right now. When I take a look at Bollinger Bands, they're still very much in play. And the first time you hit them, I'm looking for resistance. The first time you hit them, I'm looking for support. Could the market slip slide through them? Of course it could. But is it? No. The market's peaking out in that general area, bottoming out in this general area. So I see a trading range market, not a real trending market. And in terms of momentum, the momentum is still down. So in summary, you've hit some downside targets in the lower Bollinger Bands. The market's trying to grab a foothold at that price level. You've in a territory that momentum is still down. Remember, on the slow stochastics on the weekly charts, I don't look for overbought or oversold. Is momentum down, up, or going sideways? On the meal chart, same thing. I look to see if the support at the lower Bollinger Band, the first test of it, is going to hold just the way the resistance up here held. The reason for that is that the algorithm called the Bollinger Band is based on a prediction that it will modify itself as the market is trading to keep prices 95% of the time within the band. Now, when it breaks out the most is what's happening now. Notice the sideways action, how everything's narrowing in. It's a sign, and I know that if you're trading it daily, you don't believe it, but the volatility has been shrinking. That's part of what's based in the Bollinger Band. So as that volatility is shrinking, what's happening, you're staying more range bound. Now, if this market rallies, I'll look for resistance back in the 299 level. I think you're into a support zone at the lower Bollinger Band. Another wild example of soybeans has been the soy oil. If I take you back right here, the market was at the upper Bollinger Band. It had come out of somewhat sideways action here. Then it began a correction, and it did pay attention to the 18-week average of closes, went on a vertical move to the upside, and kept going right through that Bollinger Band. Now, there's 2 weeks in a row over it, 3 weeks in a row. Then the market started its correction. How deep would it go? It was straight down, friends. And I mean straight down. And suddenly it's trying to grab some traction closer to this 3180 level as a high for resistance. It is still under that. Momentum is down. The break low this week was right into this number. This is 29.94, and this week's break low was 29.81, so it got just under it. Are we trending? No. You have a lower low and a higher high in just a vertical move up and a vertical move down. Pretty wild. In the corn, my eye just goes to the fact that you're narrowing in. And this market is paying a lot of attention to the 100-week average and the 18. It sort of centered itself right here. So currently, you've got a pattern of higher lows. I think you see that. And if we come over here to this high was 394, and if we come to the last high right here, it's 392. So we have a pattern of higher lows, higher highs, which is bullish. The market closed this week at 383.5, up and over the 18-week average. So unless you get back through 375.25, on the closing basis on the weekly chart, the bulls have taken control of the market. If they can drive the market higher, the potential is there for a possibility of trying to get to that upper Bollinger Band. But right here is the spinning area, and you can see it. Take a look at that 18-week average. How often have you hit it? 1 week, 2 weeks, 3, 4. Out of the past 5 weeks, you've hit it 4 of the weeks. So the market is spinning right at that number. In the wheat market, I'll stick with what I teach. First time you hit a Bollinger Band, I expect to see money come off the table on the upside. Why? When you're over the 18-week average, I define the bias as up. When you're under it, I define the bias as down. Therefore, I'm assuming, maybe a wrong assumption, but my assumption is the algos and other traders are now bullish the market more than bearish it. It's what I call the line in the sand, and under it more bearish than it. When you get up to the first Bollinger Band test, I look for the market because of the probability that 95% of the time the market will stay within the band to back off from it. You did it again up here, and you've backed off from it. What do we have? We have some divergence. Momentum's pointing down. Price is in an uptrend with a pattern of higher lows and higher highs, and this week's low did not take out 545.25. Now, if you take out that 545.25, it would not surprise me to go back to this 18-week average for the market to try to figure out what to do. Until that's taken out, the bulls have control of the swing line and the bias, but one step is missing there, and that's called the momentum. In the cocoa market, again, you get up to this Bollinger Band top, you back away, watch, and then you come back at it again. So the trend is up, the bias is up, you're a bit excessive because staying over that band often proves very difficult. If you step back and you look at this chart, how many times do you see it? And remember, it's a weekly chart staying over that upper band. Doesn't mean it can't do it, but the probability is pros are taking some money off the table and on pullbacks continuing to step in on the long side as long as it's over that 18-week average. Same in sugar. You've got momentum still bullish. Remember, it doesn't get overbought or oversold. It is not turned down. You've got a pattern of higher lows. Each time you've hit that upper Bollinger Band in short order, you've corrected a bit. I don't see this being that much different this time around. In the coffee market, tell me when the coronavirus looks like it's peaked, and you probably will see coffee try to bottom out. Think of how many coffee shops throughout China are closed down, how people don't want to be around other people. Now, is it every city? No, but are there thousands of shops closed? Absolutely. I'm talking coffee alone, Starbucks. More than half of them, I believe, in China are shut down. Could be more than that with all the others. Now think of all the other little shops that you've got and the other brands. So coffee's been taking a hit. We'll have an idea on a bounce of resistance if it's going to hold between the 100 and the 18-week, but with this dramatic of a drop, I count on nothing. When you see a market that goes from the 140 level to near the 97 level, just like that, it's lost an awful lot of value. It needs no reason to get one of these vertical moves the other way, and no, I'm not predicting when that will happen. I have no idea. In the cotton market, I still see this as overall bullish. Now, why? Because I still have the pattern of higher lows and higher highs. I admit that what you've had is a corrective move from 71.96 back to the 66.70 level. You'd have to take out this break low to do any real damage to the chart, which is quite a ways off from where you're at. The market's been in the momentum. Momentum is turned down before price. If you take a look, watch how this started moving down on you, and it's carried the market back to that support level. But longer term, at least on this chart, it is still looking with the swing line up, the bias up, but you've got that corrective move in momentum, and until that ends, it weighs on the market. Then we get to the cattle market, and I'm still friendly overall this market. Why? It's been over this 18-week average, which got over the 100-week. And that crisscross of it, the crossover on the moving averages, took place on January 10th. It's only about 4 weeks ago. And the market went into a bit of a correction. Why? Well, China has already told Brazil they don't want more beef at this time. Remember, things aren't moving in China. Everything's on a lockdown. So a lot of the export markets that would normally go in one area, maybe they'll send beef to us, we'll send it elsewhere. You've got a juggernaut happening. And as that happens, if the market corrects, I still believe in this market that the line in the sand might have some meaning. You went down to it this week and you found your support there. Are we trending? We are not. You have a market with a higher high, and if you look at this week, we got to 120.10, which took out 121.75, so we don't have that stepping ladder like we had prior of higher lows, higher highs. Instead, the market has gone into the sideways action. If it breaks through this number, could it get to the 100-day average? That'll be the question traders ask themselves. In the hog market, we've gotten to the lower Bollinger Band again. I want you to look at the pattern here when you hit it, and then you went sideways. It's a repetition type pattern that you're getting. Now you've hit it, and the question is, what happens? For the week, the market is down 25 points. Of course, you know, it went limit up the other day, and it followed through this morning as well. So you have a market that on a weekly basis has been trying to come back, and it's got reasons that it's looking at for that. Again, I'll leave you with the market being right here, as you can see in the stock market. Now the question is, what do you do with all that? Well, that's where I come in on my morning help for the commodity markets. At about 5:30 in the morning, the 5:45, and that's a.m. Central Time, I start putting out a recording covering 40 futures markets. The idea is to help you, to help yourself. Maybe you're second guessing and you want to talk to somebody. Hey, here's a chart pattern, or I have an idea. What is somebody else thinking? And trading's a lonely thing. You know, so many people want deeply discounted commissions, or their brokers aren't up at that hour in the office. Who do you look to? I want to be that guy. That doesn't mean I'm going to be right, and it doesn't mean I'm going to be wrong. But I'm going to give you an analysis that touches on the fundamentals that I know of at that time. So I've read the Asian news. I've looked at Europe. I see what the reports are coming out in America. I've already had a chance in most markets to see the overnight trade. And before 6 a.m., I'm recording away. And the idea is to give you ideas on the market. I cover more analysis than you see here because I use more studies. That is the video that I'm able to say, I want you to buy here. I want you to sell there. The difference is you need a user ID and password to see that. It's not going to be out on public websites per se. It is only for the people with the user ID and the password. I charge for it, not much. $7.95 for the first 30 days. If you decide to stay with it, you can go on every 30-day basis. After that, of $15, you can buy after that a 1-year subscription. I'm also putting in the meantime, and it's a short while, my Spider ETF video that I put out in the afternoon. I typically get it published before 4 p.m. And the reason for that time is you got all night before the stock market opens at 8:30 in the morning the next morning, or if I put it out on Friday afternoon, that following Monday. How do you find out more? Go to our website. Under the word research, you can sign up for it, you can read about it, and under education, you see my charting course. I'm Ira Epstein. Have a good day.